Yo guys, what's going on? Welcome back to another weekly forecast slash breakdown. And before we get started, I'm going to quickly run through the VIP results and then we're going to go jump straight into the weekly forecast. Again, quick, if you guys are watching this video today on Sunday 11th of May, I've got a lifetime flash sale. Link will be in the description. Yeah, very crazy price for lifetime, and it adds up to 6 months of VIP. So hey, you'll be in there for life for one-time payment, and you get access to everything. And I'll answer any of the questions and mentor you as well. Right, before we get into it, let's jump straight into the VIP results. You can see here, total 2.1%. It was a bit better than last week. If we quickly go to the pin messages, you should see here 0.75. It was a break-even week the week before. However, took some time out. I said I'm gonna go sort of work on it, and then came back, got a decent 2.1%. So this time we managed to catch the right moves in terms of the bias for the day. The week before, we were just sort of entering the moves, and I noticed that I was going sort of away from my strategy. I was sort of not waiting for the moves. I guess I was waiting in a way, but it was waiting but had the wrong bias. So what's the point of waiting if you had the wrong bias anyway? So I was sort of trying to sharpen my skills in terms of watching and guessing the right direction of the day. And again, it worked out again for Wednesday and Thursday. This was US 100 and on gold. Obviously, the day before, I was thinking prior FOMC, you can see what happened prior FOMC. Just wasn't good at all. We didn't catch any like great major moves. Not even a 1-to-1. Actually, probably a 1-to-1 on a Monday, but yeah, nothing major, as you can see here. So this goes back to, if you have major news events, let's just treat it like how real traders would, and they'll be waiting for the interest rates or the FOMC press conference to then start entering their positions. And then you noticed how after or during the FOMC rate decision, the FOMC press conference, you ended up getting some decent sort of moves. So we'll start off, and I'm going to only just mainly talk about our gold trade here. We did catch a US 100, so I might just touch on that. So I'll start off with gold because I know the majority of you guys here trade gold. I'm going to show you how we ended up catching this one. So again, if you didn't catch this one, this is going to be one for you. If you did catch this one, well done. And you can see it was a pretty simple move, this sell position here. But I'm going to talk about it. I'm going to provide a little bit of context from the day before. Right, so you can see the day before we were trying to get in on the sell, right? And this was the US session around about here where we looked to trade from 9 a.m. to around about 11. Let's say this is the session that we're sort of getting in on. You can see it's a lot bigger candles compared to the rest of them. So there are some sort of little fakes. Price then spiked out the high here and then decided to drop. And we were looking to get in on some entries here. However, price just consolidated before FOMC, and this was exactly one person said the same thing on the group, and he was saying that price could just consolidate before FOMC. And again, at the time when the candles are printing, you don't know that, right? And I've seen it time and time again. This is why I do tend to enter after FOMC, but I decided to maybe the position, maybe when FOMC hits, it just drops and it just doesn't do anything, and the setup was before. So this is why we sort of entered, but it was a lower risk, right? Because we were waiting for FOMC, right? But then once I noticed that when FOMC did hit, we had these triple top sort of thing going on here, and I was like, hold on a second. And obviously the day for me was already over. And then when when waking up, I noticed that price during, Asia sessions decided to take out the highs. Yes, people were sort of sitting and waiting in this sort of 1 hour fair value gap, which I remember was here. You can see right there. So if you guys are sitting here, stop loss above the higher band, you would have had a banging trade there during Asia session. But, let's say, for example, you missed the Asia session, right? A lot of traders who are from my time zone are sleeping during this time. So then they wake up and they see that, right, price has dropped. Damn it. Does that mean that the move's like completely finished? Maybe not. So obviously at this time, the daily candle was sort of bearish at this time, right? So if we wanted to continue with a bearish day based off yesterday's close, yesterday was bearish. I'm expecting, between these two yellow bars here, this represents a day. I'm expecting a bearish close for today as well, right? So all I expected, and I believe I did send this on the free channel as well. Let's see where we are. And I think it was here, GBUSD breaking news. Give me a sec, let me check the free group. If you guys haven't joined the free group, the link will be in the description, because I did send this out for on gold as well. So let's see, what day is this? 9th. I believe it was here. Here we go. Yep, this was it. So pretty much this gold bearish analysis, you can see that price is already retraced up into a specific area, and all I just said is waiting for price to close below for a shift. If not, we wait. So we wait for a price to close. So that's quite simple. If we go back to the chart here, mark the exact same thing up. It was on the 15 minute. We have this fair value gap right there. I'm going to mark it roughly. Because I've got the microphone in my hand. 15-minute fair value gap. Again, this would be a sort of breaker / bearish order block as well. So you have another confluence there. If you mark a fib from the high of the Asia down to the low of this drop, look where price is retraced also, 50%. Another confluence right there, confirmation right there. That price is already at 50% level as well. So a lot of people, who look at ICT concept and say that price hardly ever gets to premium and discount. When it does, though, this is the moves that you want to sort of get involved in. So let's say that there's a 50% as well. So I ended up dropping down to the 5-minute time frame, and then we just waited for price to close below a prior low, and I believe it was this here was where I was saying waiting for the 5 minutes to close below. Now if you look very closely from that area here to the next one, you can see that this candle has closed below it right here, right? So now that price is closed below, I'm now waiting for price to retrace to give us an entry so we can then drop, right? So then you can see that once we have our shift now, so now I'm expecting order flow to be bearish, right? Because we've had our retracement, right? We've got loads of liquidity sitting below, and it's in our right timing. It's 50%, 15-minute fair value. You can see all of these tick boxes just getting ticked in my head. And my bias for today is bearish. I'm not looking for buyers at this point. I'm looking for bearish moves. So it's at this point where I need to say, right, how can I enter? Is there a fair value gap or anything? And I see this on the left here where you have volume imbalance. However, you also have a inverted fair value gap now, because the price is now closed below this fair value gap, which is a bullish one. It's now become a flipped inverted fair value gap. So it's at this point where we decide to enter, and your stop loss would be above like a little swing point, which I ended up placing above here, or like the prior high, right? So that's your 80 pip stop loss. So now initially, as soon as we get in, we get price dropping 1-to-1, right? Now you can see that the 80 pips shouldn't really matter in terms of 80 pips seems like a lot. Like in terms of the way gold moves now, and this is why I said it on the free group, that if we drop 500 pips, that means nothing compared to your 80 pip stop loss now. Like, remember, gold used to move 100 pip ranges, say 2 years ago, and I guess the start of last year, we used to get 100, 200 pip moves. But now we're getting 200 to 500 pip moves. Like, the range is a lot bigger in terms of, like, one candle could just be 100 pips. So this is why you drop your risk, right? And you can still catch insane amount of moves if your risk to reward is right. Now, obviously, I had a few messages saying where you're planning on targeting, and the main target was just to make a lower low, really, essentially, because if you see this as a retracement, you're expecting for price to push back down. And then when we were in the move and we did get a 1-to-1 hit here, I didn't put the stop loss at entry, because I know gold loves to sort of just come back towards the entry, take out the people who are a bit scared. So I know that I left my stop loss just around about here, or bought it a little lower down to a 60 pip stop loss, because I didn't want this price to close outside of this inverted fair value gap. So if price is tapping into it, that's cool, let it do that. So you can see that price did push back up, and it filled the mean threshold of this wick right here. And again, I wasn't monitoring this trade at this time. I was sort of away from the charts, because I don't want to micromanage my trades. I know that if I stay on the charts, I'll start looking and be like, should I close it? This looks a bit bullish, But if the plan for the whole day is a bearish day, even if it comes back up, I know that price should eventually just drop back down quite quickly. Now, price did come back up, retested the mean threshold of this wick here, and then price started to push back down. And this is sort of looking back at the trade, I noticed this. But while it happened, I just waited. I let price sort of charge back up. And you can see based on this trend line, price ended up just breaking out and then just absolutely collapsed. I went back down here, and now we are in our 4-hour fair value gap. So that was a little breakdown on gold. I just wanted to sort of go, talk about it a bit more in depth, because I know a lot of people say that, oh, I might go too fast. So I wanted you guys to understand how we ended up getting in that move. Hopefully you find some tips on that. Could I quickly go over to US100, and I'm going to quite sort of summarize this one because I don't want to spend too long on this move. So if we go to the daily chart, let's reset this thing here. So based off the daily chart, our main target was this buy side right here. Now again, you can look forward and you can see that yes, this buy side got hit, but where would the entry be for us to get in? I was already marking this daily fair value gap here. On Tuesday, a day before FOMC, price failed. Well, it did tap into it, but it created a double bottom, as you can see, right? This is a liquidity pool sitting right here. I didn't see this price breach the prior low here. So price was equal, and I checked that using the HLC at the top. And price sort of moved back up, and it didn't take out the low here. So it was at this point throughout the rest of the day, on Tuesday and on Wednesday, I was only waiting to place buys in this area here. Notice how price pushed up, right? This would lure buyers in, and then price started to push back down here. It did have initial start push back up again, but then it collapsed just before FOMC into this area, and now it's this point where we're active now. We are watching the charts to get in. You notice how we waited Monday, Tuesday to wait for this buy move, and then on Wednesday, towards the end of the day, it's like, right, time to get active, time to look at the charts, because it's your time to get in. And then pretty much similar sort of move. You wait for a shift. You can see that price started to move up here. And then we didn't get a close above this swing point. We did here. So this is where we start to look to get in a fair value gap. And this is where it was a close one again, where price is respecting our levels. A stop loss shouldn't phase you. Here's your fair value gap. Entries within here, stop loss below the low. Look how close price came, it failed, and price popped up 200 points and then continued close to this high, which is the weekly high there. Price then dropped and then again absolutely annihilated that place right there. So that's your US 100 sort of breakdown, and that's the trade that we decided to take. Again, we're still aiming for higher prices, but time to get into the weekly forecast. Right, so we've switched over to gold and we're getting into the weekly forecast now. So pretty much how the weekly, if you look at the higher time frame, you can see that price is currently respecting this weekly fair value gap here, right? Price tapped into it and it's now pushed back up, and it did breach the prior weekly high. However, it didn't close as bullish as we wanted it to. So it doesn't really matter though. We still follow our bullish bias. We did get a big move on Monday, Tuesday. And then after FOMC, price slowly pushed back down. Where it pushed back down to was this daily fair value gap, right? So price has pushed back into this daily fair value gap. Now you can see that on Friday, price closed bullish. This is a sign going into Monday, Tuesday next week that we will be expecting a bullish move. If price is closed bullish on a bullish candle here, I'm just aiming for price to get above the prior daily high, right? So if price pushes lower on Monday, right, this is a good potential setup to get into some buys around this wick area here and the lower part of this daily fair value gap. And this will allow you to sort of, let's say you get a little reversal pattern here. Oh my gosh, the arrows are a bit weird on the daily time frame, but let's say you get something like this, and you can target this daily high here, and you can be in this bullish move. So we're going to see exactly what happens on the market open, but my main target for this week will be this prior weekly high. I think it's good enough. I think this is a retracement here going into to continue higher, and then on Friday, I believe, after I remove this box here, we ended up getting a shift. As you can see here on the 1 hour time frame, price pushed down, pushed back up, and then price closed above the prior high, which means that this is now your breaker block, right? So any bearish moves sort of tapping into this area, you should get a bullish move back up out of, and we're starting to get that. So you can see at the end of Friday, price is starting to retrace. Hopefully price can get back into this area here with a nice bullish move after, or this all could happen during Asia session. So it's going to be a different one. I'll keep you guys updated on the free group, and if you guys haven't joined, the link will be in the description. So in short, let's recap that again. If we just sort of monitor and mark the low to the high here, right, 50% is sitting around about this area. Let's say your OTE area is there. So if we start to see that price pushes back down into here, and then sort of just gives you like a little shift, right? It wouldn't be that bad to get in on this move here with your stop loss below the low and expecting higher prices. Again, daily, the PDH will be there. So if you write PDH, that's a prior daily high. That's your prior daily high right there, and that would be your target going into Monday. So if you can aim for a 1 to 2, a minimum 2R on this in this trade here, this would be absolutely fantastic. Let's say this was the move that happened, and I put a long position here. Your stop loss were below there. Let's say 100 pip stop loss. Your target 200 to 400 pips. So you can see that right now this is above 2R. So if you got a move like this, absolutely great move, and you can be done. You wouldn't even have to hold out for 4 weeks. You don't have to catch all the moves. You could just catch 1 day's worth of move. So this is what I'll be looking for. Bearish move going at the start of the day and a bullish to end it, so we can close bullish, and this will enhance my bias going into the rest of the week. If you look at the news, CPI, which will be on the 13th again, which is on Tuesday, so we could get accumulation on Monday. So you could you could get price charging up on a Monday, where price just sort of just zigzags, right? And then what would happen is on Tuesday, price slams down, and then its price moves straight back up, and then you carry on the move after Tuesday. So let's say, for example, here is Tuesday, right? And then you get the move. So we're going to have to see exactly what data gets printed and then react accordingly. However, in short, I'm bullish. That's all I'm trying to say going into next week. Now, let's quickly switch over to US30. US30 is a bit of a tricky one, so I'm going to wait, I believe, on Monday. I won't be trading on Monday. I'm just going to see exactly what happens, because if we look at the daily candle, price has closed bearish, right? Which shows us that price is reacting off this opening gap and is now sort of trying to turn around to a bearish structure. However, we've got this low here and this high here. So I want to see exactly what happens. If price starts to push lower here, we could get another attack of the high here before turning around, right? However, if price pushes up at the start of the week, this could be a market maker sell model where price sort of charges, pushes up, and then after CPI, price starts to drop back down, right? And that's your prior weekly high taken out, and then price starts its bearish move. So I'm going to keep an eye on this opening up, see what happens here if price taps again and then starts to fall off, and then this could set up our bearish move. There's US30 and US100. You can see that I have got a bit of a buy position here, holding over the coming into next week. My main aim is to see if price can breach this high here as liquidity, and then to start to fall back down. So again, it goes over into US30 with that bullish move to start off the week, to then for after CPI for price to drop. If we look at what other news we have PPI as well, I think 2 days after on the 15th, and then housing starts on the 16th, which I believe is Friday. So pretty busy week. I'm sure we can catch some good moves. I'll end it there. It's been OASFX. Links in the description. Peace out.